Good morning. Welcome to Stock Market Today. It's Tuesday, February 19th, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Follow me on Twitter at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. If you head over to chaikinanalytics.com/today, you can sign up for a free email. You follow along with this show, as well as get daily stock ideas every day in your inbox, some thoughts and ideas for you to consider before the market opens each trading day. I hope everybody had a nice long holiday weekend, but we'll jump right back into it. U.S. equities were higher in Friday's trading, led by the Dow and the Russell 2000. All of the major sectors finished higher on the day. Treasuries were mostly weaker. The dollar was little changed on the yen and euro, but weaker against sterling. Gold finished up 6 basis points, and oil was higher, with WTI settling up 2.2%. Your outperforming sectors, financials, energy, and healthcare, while your underperformers had that defensive feel to it. Utilities, communication services, and REITs were your three lagging sectors on the day. As we get to the desk this morning, S&P futures are down about 20 basis points coming out of the long holiday weekend in the U.S. Asian markets were mixed overnight, but were strong on Monday while we were closed. European markets are mostly weaker. Treasuries are little changed. The dollar is stronger versus the yen, but little changed versus the euro and sterling. Gold up 80 basis points, and WTI crude is adding on, up 90 basis points here in the early going this morning. S&P 500 powered through. Strong move above the 200-day moving average is really how you can describe Friday, closing near the highs of the day. As we think about support now, the 200-day moving average at around 2740, 2744 becomes support. Then we have support in the area between 2680 and 2700. Resistance, have to start to think about the round number at 2800 and then those interim highs at 2815 to 2820. RSI is in an uptrend, and that is encouraging from a momentum standpoint, but we still would like to see this overbought reading. Chaikin money flow remains bullish and up here near 12-month highs for this indicator. So the rally from December can really be described as not giving you much of a chance to get in. You've had some pullbacks, but you've had to be quick and nimble. They haven't lasted long. Now we need to start thinking about what do we do? Well, at support levels, we look for bullish and very bullish stocks that are oversold. And at resistance levels, we look for bearish and very bearish stocks that are overbought. Those are our names to buy, and those are our names to sell, respectively. Your market in a minute now. What am I talking about? My note to Chaikin Analytics clients today. We talked about the stocks continue to climb past the 200-day moving average. That's for the S&P 500. Relative weakness in capital market stocks is beginning to wane, and I think that that's interesting. We have a trade idea for you that I am highlighting here today with TD Ameritrade that we're going to look at momentarily when we look at our stock of when we get through our highlights. Relative weakness in energy has been a theme, but that downside momentum may be fading, and we'll take a look at what I mean by that. Defensive leadership is also under pressure. When we look at our sector tracker, take a look at the defensive sectors. They're starting to come under pressure from a relative standpoint, and as I said earlier, futures do point to a lower open here today. Power bars, we for the major indexes now, Dow, 8 bulls, 5 bears, S&P 500, 142, 56 bears, 142 bulls, 56 bearish or very bearish stocks. NASDAQ getting close to 3-1 in favor of the bulls, 30 bullish or very bullish stocks, 11 bearish or very bearish stocks. Small cap stocks, 584 to 309, bulls to bears. Small cap outperformance on Friday. Small cap outperformance, an ongoing theme really since the December lows. Bonds upticked, sending yields lower, but despite that, financials had a good day on Friday, up 2.09%, leading sector on the day. 33 bullish or very bullish stocks within the financials for only 4 bearish or very bearish stocks. According to the Chaikin Power Bar, small cap stocks and large cap stocks have become bullish. Major indexes are mixed. I'm going to say they're mixed to skew to the bullish side of the coin. Our stock of the day today is an interesting one. It's called Zimmer Biomet. Medical products name closed at 123.65 on Friday, up 95 basis points. So actually a slight underperformer relative to the market's greater than 1% move. Ticker symbol ZBH has a very bullish Chaikin power gauge due to very strong earnings performance, very strong price volume activity, as well as financial metrics that are attractive. When we look at the stock here, very bullish stock, strong trend, strong industry group, type of name we want to consider. But it is overbought. That's the first thing you're going to notice. But what I want to talk about today is what we refer to as a personality change, which leads me to want to keep a close eye on Zimmer. The personality change is when the rating goes to bullish or very bullish, and then the stock begins to outperform. Money flow turns bullish. Stock regains the long-term trend line. So where all of these things were kind of lined up to the bearish side of the coin, they're all now lined up to the bullish side of the coin. What we're waiting to fall into place is the tactical indicator that tells us it's time to get involved, and that would be our overbought, oversold indicator, which is still strongly overbought at this stage of the game. We don't want to chase Zimmer up here. We want to see some consolidation, maybe pullback that holds above this 118, 120 level, works off this overbought condition. Then we want to get involved with Zimmer Biomet, ticker symbol ZBH. I'm adding Zimmer to a bullish watch list today. You should do the same. Personality changes can be powerful characteristics that set the stage for moves higher in these stocks. So that's what we're going to be keeping a close eye on. Adding Zimmer to a bullish watch list, not getting involved today. Sector tracker, movement in the major sectors over the last 5 days. Energy. We're going to look at energy because downside momentum on a relative basis is certainly waning. We're going to take a look at what that could potentially mean. It is moving higher with the price of oil. Industrials, we called out industrials last week, if you recall. It was relative strength Tuesday last week. And we called out the industrials as emerging leadership, and that trend has continued. Materials are another group that's seeing their downside momentum wane and starting to build a base on a relative basis. Healthcare, seeing a bit of a rebound. That's encouraging. Financials, middle of the road. Discretionary and tech, also in the middle of the road. But look, the bottom of the list. Your defensive sectors are coming under pressure. Real estate, staples, communications, and utilities are the bottom 4 performers over the past 5 days. Those are your defensive groups, and those are your groups now that are failing to keep up with the rally. Investors are shifting to that risk-on mentality. Remember back in October, we talked about getting defensive and lowering the beta in your portfolio. That is beginning to unwind as the low beta names, the defensive names are underperforming, while the big underperformers throughout the downfall are starting to show some signs of life on a relative basis. Keep that in mind as you're allocating your capital. Industry focus today, bank services. Over the past 6 months, subsector has underperformed the S&P 500 by nearly 6%. However, big change afoot. Power bar ratio, which measures future potential, is very strong, with more bullish stocks than bearish stocks. 54 bullish or very bullish stocks, only 1 bearish or very bearish stocks. That is enough to earn this group a rank of number 2 of the 21 subsectors that we track, and it has moved up 1 slot over the past week. Some of the indicative names there, all with very bullish Chaikin power gauge ratings. Radian Group, ticker symbol RDN. FNB, ticker symbol FNB. And Chemical Financial, CHFC, all have very bullish Chaikin power gauge ratings. And so let's take a look at Radian here today. Ticker RDN, Radian Group. Closed at 21.03, up 7.5% on Friday. Very bullish stock, strong trend, strong industry group, fishing in the right pond, as I like to say. Type of name we want to own. Ribbon at the bottom of the screen, what are we looking for? Bullish stock that's outperforming the market. We have it here. Dynamic duo in gear, market and model in agreement. Solidly bullish money flow above a rising long-term trend line. And an oversold stock based on our overbought, oversold indicator, to me, sets the stage. You want to be looking at this stock on the long side, especially on a break. Further break through this $21 level. RDN, name you want to be looking at as a long idea in the here and now. Take a look at it. Leading stock in a leading part of the market, becomes oversold with bullish money flow. That, folks, that's the setup. That is it right there in a nutshell. If I had to boil it down to one sentence, that's it. Take a look at RDN on the long side. Trending names now. Yes, Friday's S&P 500 gainers and losers. Arista Network up nearly 10% following their earnings announcement. CenturyLink catches a rebound after being down sharply on Thursday. AIG caught a downgrade, but the stock rebounded to close higher by 5.3% on Friday. Dish earnings sent that stock higher by 4%. And remember what I talked about, the energy names starting to show some waning downside momentum. Devon up nearly 4%. Still has a very bearish rating, but start to think about the relative. If you're looking at these names in a bearish way, dig in, look at the next derivative. Newell, earnings report as well as guidance takes that stock down 20%. Mattel, so a few days after reporting earnings, Mattel comes out and cuts their guidance. Folks, that is what we refer to as you now have a credibility issue. Stock down 18%, investors voting with their feet, getting out of the way. Applied Material down nearly 4% on earnings. Hasbro had some analyst meetings around Toy Fair. Obviously, investors didn't like what they heard there. Stock down nearly 4%. Probably some sympathy from Mattel as well. And then Under Armour rounds out the bottom performers, down over 3% on the day. Earnings update. One of the names that's not on this list is Walmart. They reported this morning stock is trading higher. After the close today, SCI and WTR are neutral stocks. Bearish names, CLR, RIG, and Tax. Chaikin suggests caution when holding bearish stocks ahead of earnings. So let's start talking about what we're looking at what we're talking about in the note today. Capital markets names have been under pressure since the summer 2018. Here's KCE relative to the SPY. Nice, steady downtrend, confirmed by momentum with the RSI firmly in bearish ranges that entire time. But now look at what's happened here. This relative strength low is not confirmed by momentum, as this low here did not make a lower low with the RSI. And now we have a series of higher lows with the RSI as this downtrend line has become broken. Now, we're not out of the woods yet by any means. Still below a declining 200-day moving average. But the trend has changed on the margin from down to flat. So that's when we want to go start looking for the strong names within that group. At the same time, you've got a bit of a breakout on an absolute basis here for KCE. So on the margin is where we look for opportunities. This downtrend has been broken. We want to look at a name like TD Ameritrade. It's my bullish stock of the day today in Chaikin Analytics. Very bullish stock, strong trend, strong industry group. Very bullish name. Dynamic duo in gear. Market and model are in agreement. Stock becomes oversold with bullish money flow above a rising long-term trend line. Folks, that is the setup. We have support here in the $53 to $54 zone. Use 53 as a stop to enter a trade in TD Ameritrade on the long side here today. Ticker symbol AMTD is my bullish stock of the day. Downside momentum in energy is waning. This is the XLE relative to the SPY. It's relative strength Tuesday, folks, and I'm not going to disappoint you. I'm going to show you what I'm talking about today. XLE relative to the SPY. Again, same story as capital markets. Steady downtrend confirmed by momentum. This low here at the end of 2018, early 2019, not confirmed by momentum as the RSI made a higher low and continues to make higher lows as the relative ratio goes from a downtrend into a sideways consolidation. Now, we are still below resistance and below the 200-day moving average. But again, the reason I look at these patterns and these themes on a weekly basis is because I am trying to catch the changes as early as possible. I'm trying to catch the changes on the margin to look for opportunities. All throughout this downtrend, we've been bearish energy names, and that was the right name. I don't want to press bearish bets in energy names when the relative trend is shifting from bearish to sideways, and the absolute trend has broken a downtrend. That's why I'm watching this, folks. That's what I'm talking about when I say changes on the margin are important, not pressing bearish trades in energy right now. That's it for today. I'll see you back here tomorrow. Have a great day, everyone. Happy Tuesday. Welcome back from the holiday weekend.